Oh, this is Greg Britton, your Spokane mortgage strategist. It is, what is it? It is Monday, June 6th, coming off our best weekend weather yet to date. Hopefully you got out and enjoyed yourself. A question, starting these with questions now every week. What is your opinion on how much money a home buyer should have to put down when they're purchasing a home? And we had this period of too many zero down loans that a lot of people said, hey, no skin in the game. That's why the whole thing collapsed. The other side now is a push for more and more money down, 20% perhaps, which many say, well, that'll kill the housing market. That's just too much. So where is the comfort zone? And should it be related to credit score? Higher credit score, less money down? Lower credit score, more money down? So I'm just curious where your opinion is on that. As far as the mortgage bond and housing market, last week mortgage bonds had another stellar week, climbing to their highest levels of the year again. Why? A lot of the economic reports missed their mark. They came in lower than expected. Poor economic news, or more precisely, economic news that comes in off the mark, below the mark, will be bond drivers, and you know the market's anticipating, even if it anticipates a poor reading and gets that poor reading, it doesn't necessarily move the bond market. But if it anticipates a reading and then comes in way below the anticipation, that's really where the movement comes in. So we saw a lot of that last week, and of course Greece is still playing, and their economic woes are still playing into supporting mortgage bond pricing and keeping rates low. What's on the agenda for this week? The major things will be the 3, 10, and 30-year Treasury auctions. The 3 years tomorrow, the 10 years Wednesday, and the 30 year is Thursday. The bigger the appetite for these Treasuries, this U.S. debt, the better the bond market will do. Mortgage bonds. So mortgage bonds are the beneficiary of high demand for Treasuries. If there's lower demand, especially on the 10 and the 30 year, then we might see mortgage bond pricing drop a little and rates potentially going up. Now keep in mind that this mortgage bond investment, is at its highest level of the year. That's not a real incentive for people to be buyers and push the prices higher. It's more an incentive for a sell-off when it's peaking. So that is really playing into this as well. And there's a lot of pressure for a sell-off in mortgage bonds. So we'll see if that happens or not. It hasn't happened in the past few weeks, that's for sure. So they continually have been strong and steady and climbing. So, boy, we'll see what happens there. That's it for Greg's Home Update this week. Thanks for joining me, and we will see you next week.